Guys, what's up? Welcome to the channel. It's your boy Sammy. In today's YouTube video, I'm going to be walking you down to understanding how price action actually works in the market. Now, one of the things that beginners traders are actually struggling with is actually which of these indicators should I go with? Should I go with the trend line indicator? Should I go with the moving average? Should I go with the whatever indicators that comes to your place? And some of it are Fibonacci's and other tools that are used in the market. Of course, all of them works, guys. All of them works. But one of the thing about me, I learned from trading with trainer is I like to use price action. Now, if you're familiar with my chart and if you've been watching my YouTube videos, you will observe that my my videos are actually clear and they're plain. I actually use only one thing, and that's my trend line. Now, how am I able to do this? I'm able to read price action, and know what the market is doing. That way, I'm able to stay profitable. Now, if this is something that you wish to learn, I'm going to be guiding you on how I'm able to do it in my videos, and it's able to give me profit at the end of the day. Now, if this is your first time watching our YouTube video, I would like you to subscribe, like, and hit the comment section below. So, if you're ready, let's get diving. Now, what's price action? It's actually the movement of price in the market, and in the chart, which tells us what the price is doing. Now, for the sake of this video, I'm going to be making it in a bullish scenario and also in the bearish, because all what we do in the forex market is buy at a lower price and we sell at what higher price. So this it here. So my market was bullish here, where if you had entered it straight up, the market would have taken you here. This was the high. This is the next one, the swing low, that swing high, swing low, and this was the height of it. Now, if you look closely very well, this market was respecting the world trend line. Now, one of the things that the market does is, after giving profit in one direction, it's going to be coming back to run out what liquidity, because liquidity is actually the fuel of the market. I know a lot of you are like, what is liquidity? Liquidity is actually a pool where stop losses are what resting, and where buy limits and sell orders are resting the market. Take for example, if I enter this trade here, my stop loss will be here below the what my entry. Of course, when the price came here, my stop loss will still be here. So if I'm still here thinking the market will retrace from here back up, like the way beginners think, one funny thing about the market is, when you see some of the things that might make you feel like you should exit, you wouldn't want to exit. You'd be like, the profit is not enough, I wanted more. And after some time, you see that the market really fail, and you'll be like, I wish it can just reverse and give me a little bit profit. Yeah, beginners can relate with what I'm saying. But the thing here is, you have to be able to control your emotions for you to stay profitable in that. So when I entered here, my stop loss will be here. So the market is going to be coming after my stop loss. Some folks that entered here also, their stop loss will be here. Entered here, their stop loss will be here. So liquidity is resting in this world trend line. So we can say that this is what trend line liquidity, because so many folks are actually what in this trade and they are buying. Now I'm going to be showing you how to read price when the market wants to reverse. Don't forget, I'm going to be using three indicators that I use. The first one is candlesticks. The second one is the first one is candlesticks. The second one is um, trend line break, and the third one is major swing point. Major what swing point is what I'm going to be using to identify the market. Now I told you that I use only trend line. So when we entered here, price was going up, going up, going up. So don't forget, all of these are swing highs and swing lows, swing highs and swing lows. Now let's observe closely. You start from the first one. The first one is candlesticks. Look closely very well. You notice that this market was bullish, and at this point, this candle momentum, what I mean by momentum is, if the candle is just like this is actually momentum of the candle. But if it is bigger than this, it is still momentum. So when the candles are big, it actually shows that the momentum of the candles are actually what large, and it shows that the price is still strong. But whenever a market wants to reverse, you will notice that the candles start becoming smaller. They start becoming smaller. Notice it here. all here the candles were strong, but when price got to where it wanted to reverse, you notice that the candle started becoming small. It started becoming small. And now somebody may be asking, why is this other one's big? I'll tell you the trick. Now the trick is because price wants some folks to get in here. That's why I started making the candles big and giving them more confidence, thinking that the market is too bullish, whereas they want to turn what? Bearish. That's the first indicator. You notice that the candles that are the momentum that were large and big, they start becoming what? Small. As you can see it here. Now, the next one is, like I mentioned, is trend line break. But before we talk about trend line break, I would like to identify major swing point. Don't forget swing point, swing point. We have higher high, higher low. For those of you that don't understand what I'm talking about, higher high and higher lows, there's a video that I made about market structure. It's actually in series. I left it in what? In the catalog. So I'm going to be leaving the link in the description below. You can gain access to it. So this is the entry here. So this is the last swing low that took price to the upside. Now this is very significant. Why? Because whatever happens here tells us what the market will be likely do. Because normally if the market move up, this is the swing low, it's supposed to come and tap into it, not break it and continue going up. But in this scenario, what did we see price do? Price actually broke below it. Let me get this out. Price actually broke below it. You can see that the market broke. So what does this tell us? It tells us that the market is about to shift. It's about to be a market word shift from the bullish to the bearish. Now this is an indicator. This is the first one. Swing low, swing high. This is the swing low, this is the swing high. Now I used to tell traders that this is the secret. Forex is not actually hard. This is it. If you understand this, this is the swing low. Now whatever that is happening here, don't pay attention to it. Pay attention to what is happening here and what is happening here. Now how? Whatever that is happening within this range, don't pay attention to it. Wait for either the market to come down here or goes up here. If it goes up here, it shows a break of structure. Now your duty is to wait for it to come back before you enter. But if it comes down here, and break below it, it also shows a break of structure or a market shift. So in this scenario, what can we see? We can see that the market actually what gave us a market shift. Because why? This one that tapped in here, it went up, but it did not break above this up. It came to this other block. Okay, I mentioned order block. Now order block is actually pending orders where traders can execute their trades. They can place in their buy stops and sell limits, whatever pattern of trading they want to do. Okay, depending on the trend. But in this particular one, you can place your sell stop. Yeah, sell stop here for the market to retrace and tap into it. But we don't know what the market is doing. Because why? We are stuck in between. Guys, we are stuck in between. Let me explain what I mean. Now this is it. This is the last swing point. This also is the last swing point. Now we are stuck in between, the sense that price did not come to break below this. It only tapped into it and went up. Now when it came up, it also tapped into this one, into this zone here, which shows us that we are stuck in between. So like I said before, we only wait for price to break either of them. Since this is the last swing point, it should break it below, or it should break this other one below, above rather. So but what happened here, it was just stuck in between. But fortunately, what happened, the market retraced back, came back up, and finally broke below it. So this tells us that price has actually what changed. The market flow has changed. Why? Because the market is now what turned from what bullish to what bearish. The third one that I mentioned, trend line was break. So we can see that the trend line was equally broken. Trend line was broken. So we have three indicators that I mentioned. one, the momentum of the candle started becoming small. The next one is we notice is that the market came and broke below this major swing point. Now the third one that I mentioned was there was a trend line break equally, because the market has been respecting trend line. So now where, Sammy, someone will be asking, Sammy, where do I place my entry? How do I know when to get in? Hey, there's an expo here. It's simple. Don't forget, price did not take this high. Price did not take this high. Okay, it only respected it here. So when the market retraced back to this upside, let me zoom this closely so we can get the picture of what I'm saying. So price did not take this high here. Don't forget, price did not take the high. So what did price do? This shows a break, market structure shift, or you can call it a break of structure. For advanced guys, I think they call it a change of character, Chochi, something like this, Chochi, 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 change of character. So this shows us that the market has shifted. So what can we see here? Since there's a break of structure, this is where traders miss it, guys. This is where traders miss it. After the break of structure, they start struggling to enter here. That's not it. Remember what I told you, always wait for the market. Since this one has been taken, they will come back here. No matter how long it might take, your duty is to wait. They will come back to this place here for you to get your possible entry and put your stop loss above. Now what did price do? That's where you're going to be getting a good candlestick pattern. Okay, this was it here. So this was the entry that we got. This was the entry that we got. That price actually what respected here. It came back here and respected it. Now we are going to be targeting. Now let me talk about where to target. Where to target. Where to target. It's simple. Let me make it a little bit easier for us. Now where do we target? There are lots of zones. Now the first target should be here. First target should be here. Second target should be here. Now how do I know this is the right place to target? It's simple. Now when the market came down here, this is a major swing point. Is a major swing point. Why? Because why? This market broke above this. Remember what I was telling you about swing points, right? Swing point, swing point. So this is a break of structure. Anytime this swing point is broken, it's actually a break of structure. So we focus on this one below, major swing point, and what happened in the future, we can see price respected it. Okay, so let's look for another one that actually broke structure. Okay, like I said, we have this one here. So how did I know this is a major swing point? Is the last one here, so I can see the future price respected it. If you gain any value from this video, don't forget to leave a like, comment in the section below, and also the only way you can support us is just to subscribe. I'm going to be dropping future videos, and just let us know about videos you want us to create. Also, thank you.